Hello guys, how are you all? So last week I came out, I gave a trade to you all. I said that Nifty might go to an all-time high, and also I shared a strategy by which you would have all, if you would have like taken the trade according to our view, you would have easily made a ROI of approximately 20,000, approximately ROI of 25%. So. Uh, I said that if Nifty crosses above 19,850, we will go long on the calls of 19,800 and we will short the calls of 20,000 approx. If you guys would have taken this trade, I gave this as the first target and this as the second target. Both the targets has been achieved, and now we are going towards all-time high. Roughly, if you would have taken a trade on the uh, so I roughly if you would have taken the trade on the weekly expiry, so the monthly expiry of the last month expiry was on 30th November, if I am not wrong. So I said that if we cross above 19,850, we might get a target of 20,000 in the weekly expiry, but we expired around at nearly 20,100, which was also even above our level. If like some of you followed some trailing techniques, or some trailing criteria, you would have easily got an bigger target and bigger profits. So now, what is next for us? So currently, as we see that Nifty is above its all-time high. So I have been in some of the position long. So I've been some. I had some 20,000 calls long for December expiry. So I hope some of you, if you are playing by the view, you all also had a bigger positional or swing trades in your system, whether in form of equity or in form of derivatives. So now, as we are above the all-time high, we will again draw down the levels and like make a view on how to be on the right side as we go forward, and how to not lose the profits that we earned using the strategy I gave out, and also using the view that we had built last week. So let's start by analyzing global markets. What is happening? I still see dollar index as a a weaker pair or a weaker index. It has continuously been making lower highs, lower low, and still continues to do so. I'm not getting to see any strengths here in the dollar index, which means that the equity market might continue to stay on the upside. Let's look at the charts of Dow Jones. Dow Jones has also done pretty well. So the last weekly, or the rally that we saw in the last week, I think it was really driven by the macro factors in India, plus all the macros factors around the globe. Also, it was driven by the macros factor. By what I mean by macro factor is that all the markets around the world are doing quite good. Also, it's not that the charts are showing that they are doing quite good. It's the broader economy which is doing quite good. Also, we had the elections. Some of the results are out today for Maharashtra and Rajasthan in India, and the BJP government is again elected, I think, which might also fuel this rally further on the upside, because I believe that BJP has been a stable government in India since last 8 years, or 8 to 10 years. I believe they were elected in 2013. It's been approximately nine years if we count it till 10 years if we count it till 2023. So BJP is doing quite well in India. It's a stable government, which might also further fuel the rally in India, what I was telling you about. And we might continue to go on the upside, even even like going into December. So if you follow Calculated Risk, which is one of my pages on Instagram, and it has a, what do you say, it has a presence all over Telegram, Twitter. I have been talking about a Santa Claus rally. So we might see a further Santa Claus rally. That's all I mean currently. But as we see that Dow Jones has come to its post-COVID high of November 2021, the late 2021. I think the US might face some resistances at this level. However, it is a very strong indication that we have come till this high, because this was the time when the story of, what do you say, uh, a recession was sold to the investors, and which drove the markets down till approximately 20,700 on the Dow Jones. Here, everyone was talking about recession, 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 and the economy was really not doing well, as Fed kept increasing the interest rates, and things weren't looking very good for asset classes like equity, because the interest rates were just climbing on as we went month on month. So now that the interest rates are stable, the inflation in the US has come down. The last CPI data showed that the inflation has reduced. The CPI numbers were good. And now that we are again in the highs of post-COVID rally, if we cross above this in what do you say, US, this levels all-time high, if we try to like close also above this on daily charts and on weekly charts, I think it will be a very bullish indication. So I would want you all to mark this levels on your charts on Dow Jones and keep a track, because if we are able to close above this, it will be a very bullish indication, as now the US markets will also be making all-time high. So Dow Jones is near its all-time high. However, S&P is a bit far, but I think S&P will go till 48 200, as it does not have any strong resistances till this level. And if it breaks further from there above 4800, it might just shoot. So let's keep our target small for now. We are looking at the levels of 4800, and let's see if Dow Jones is able to break. Again, I told you that there has been a fake breakdown here on small caps. Now it is heading up. We have a target of upside of this channel. I also believe that this was the end, and we might again break out of this channel if we come near it. So I expect what do you say, the ideal price action for me would be I would love to, what do you say? I would love to see Dow Jones, Russell 2000 go here, do a bit of consolidation here, and then break out. This would be ideal scenario, and I think this is the bottom, and we won't be seeing this levels anytime soon again. So everything looks bullish now. So let's also, this is the SPY. This is the typical ETF which tracks S&P SPX. This is also at its all-time high. It has broken out. Let's see if this sustains. Now, just talking about important levels for us. So, for example, our trailing levels. So what I do is, generally, if I am having some long positions in Indian market, I'll be also following some trailing criteria in the US markets. For example, if some levels break in the US market and India does not go below, I will be coming on my back foot and taking more precautions, like booking some profits. This does not mean getting into shorts. It means booking some profits, waiting for further price action to unfold. For example, now that we are above this trend line and we have broken out of it, if we again come below this trend line, which would be approximately around 450 levels on SPY, I would get conscious. So I want you all to mark these levels and keep a watch on it. So now our trailing stop losses can be 450 as a round number on the US market. We shouldn't come below it. We can do a bit of correction here, retest this, and then go up. But I won't like it if we again come below 1450. This would be clearly a red signal for bulls and our long positions, and we can try to book some profits. But until and unless we are sustaining above this, I would be comfortable on going long in the markets. So I am currently, I'm not giving an intraday view or a short term view. I'm making a bit of a long term view, because I think you all should play it, have some of your positions in positional trades, as that's where the big money is made. So yeah, we shouldn't break below this trend line. We are doing quite comfortable for here. If we continue to go up, there's no need for shorts to be in our system. We will only think about shorts if we come below 450 on SPY. Yeah, so now let's have a look at the UK index. This is also doing quite index. It's not been a very bull market, but as you can see, we are at all-time highs. We might break above. So just to take a context from other markets, they are doing quite comfortable. UK is doing quite good. Let's see this CAD. This is also breaking out. Let's see DAX. If you all don't know what are these indexes, you can go and watch my previous video. I've told what these indexes are, or you can just Google it. So DAX is doing also quite comfortable. It's a German index. Asian markets. So Asian markets are also doing quite comfortable. Just look at the chart. China is not doing quite well, just because that investors have pulled out the money from China, because they are not. So in China, as there is only one party ruling China, they don't let a lot of information to come out of China. For example, the media is what do you say, regulated, and all the things are regulated. So investors have pulled out their money because they are not aware of what is actually going on in the economy. So looking at the indexes, for example, Taiwan, they are doing all quite comfortable. This Hang Seng index is not doing that well, but broadly looking at most of the things, they are doing quite comfortable. This Taiwan index is also at all time high. Just look at the VIX. VIX is going down and down and down and trading in red, which means the fear is there is no fear in the market, or there is less fear in the market, which tells us that the rally which is currently happening, it is happening on low fear, and it is a genuine buying that is happening. It is not some fake buying. It is not some short covering rally. It is basically a long build up. So now let's move to the Indian markets. I just said that Nifty has just closed above its all-time high. I would love to see if Nifty continues to sustain this level of 20,200 until this level or this gap has like until this gap is what do you say? Until we are sustaining above all-time high or this breakout of 2185. I don't think there is any reason, and this is a bit conservative stop loss. This is a trailing stop loss for me. So for example, if Nifty comes below this level also, I will just cut off my short term what do you say, short term longs, which might be for December, as it might indicate that we are likely to go sideways. But my conservative stop loss will again come below this swing of 20,000, and I don't even think that Nifty will even break this levels of 20,050. So 20,000 we can take as a broadly a big stop loss for our longs. For example, if you are long in some Nifty positional futures for like the whole year next year, or you are buying 2-3 months future contracts, then 20,000 can be a good stop loss for you. Short term stop losses can be just below the uh, Friday's candle. And if we come below it, you can cut your short term, because you will be already sitting in good profits, because this rally has just happened, and it will be a good indication to book your short term profits. So for Nifty, I have always had this target of I'll just show it to you what targets I have for Nifty. So now that we are what do you say, we are at all time highs, um, it is very difficult for us to find out targets. I'll just open a broader chart and show you guys what I think of as a big target. So the bigger target for me on a 6 monthly chart for Nifty is 20,986. I don't think it might come just as of now. It might take some time. So let's wait. Let's keep a watch. Nifty is bullish. Uh, for example, now what you all can do is to have targets on Nifty, you can just pull out some what do you say, pivot points. Pivot points is a good indicator for us to find targets for uh, for this pivot points. I always take a settings of Fibonacci. So this helps me draw. So I don't use it when we have a given range in the market. So I knew that this was some level which we might get, and I gave it out as a target. But now I don't know where the markets might take some resistances. So then in this case, I'm using pivot points, and I'm broadly like using it on bigger time frames. Now on weekly, it shows that 21,000 is a good level, or good what do you say, R3, and a good resistance. So 21,000 will act as a good resistance in Nifty now. Before 21,000, I would love you all to I would like you all, not love you all, to book some profits at 2,500. So now that we are in a bull market, just keep short targets of booking some profits, like, because we will never know when the market reverses. So 500 points is good. So these are round numbers that typically play out as resistances. So 20,050 and then 21,000. Yeah. For Bank Nifty, we still have a target of all-time high. If I showed you all this trend line, this upward slanting trend line, which we had broken out on July of 2023, June of 2023. So we again came below it. I think this was some kind of a correction that I had marked. Now that if we break above this trend line again, this blue line, so let's say if we go above 45,000 and if we are sustaining, we might get a target of all-time high of 46,290. That's how I would love to play Bank Nifty on the upside. And this is how we will, what do you say, trade on our markets going forward. Axis Bank is really a good pick. If you want to go long on Bank Nifty, I don't think Bank Nifty is worth it. Just pick a outperformer of that index and go long in it. Axis Bank, I have a target of 1150. Like, that's a short-term target. I'm already long on it. So if you find any dips, buy Axis Bank till 1150. It would be a good long. if not, if you all want also want some trade like last time, I would love to give you all some trade, some strategy that you all can do that will also minimize your risk and maximize your reward on the upside. So let's go to option strategy builder. So we have earned 25% in the, what do you say, last week. Now we will be playing it a little conservative. So the trade I'm going to give you, your stop losses will be Friday's low. I don't want you to take a large exposure because I think the rally has already been extended a lot. We'll wait for some correction. If possible, there might be no correction just because the global markets is very bullish. So it is okay to enter in some trades, but we have to keep a very tight stop loss. So Friday's low will be your stop losses. And for index, you all can buy 20,200 call option for December. So I'm just showing you a trade with one lot. So in this one lot, you'll use a margin of 16,000. Your maximum risk is minus 16,000 because you are paying a debit of, what do you say? You are paying a debit of that much of amount to buy that option. But I don't advise anyone to be naked on the market. So I will advise everyone to sell 20,500 call options. So this is a 1:1. So we have bought 20,200 call option, and against it we have sold 20,500 call option. So our maximum profit will be at 20,500 at the expiry. That's what our short-term target is. And if we are reaching to 20,500 till expiry, we have a maximum profit of approximately 33% ROI. So the return, so estimated margin which is used to do this strategy is just 20,000. And if we reach 20,500, we'll be getting a maximum ROI. So if we expire at 20,500, the maximum ROI that we can get is 33%. But if we so if we, what do you say, if we reach there below before expiry, and if we don't expire at 20,500, we will still get this blue line tells us that before the expiry, if we are reaching what do you say, in next few days, for example a week or two, if we reach that point, we'll be earning 2,000 rupees on a uh, estimated margin of 20,000, which is also 10% of the ROI. So on the what do you say, on the, so uh, we have a maximum ROI that we can get is 33%, and the below range of that ROI that we can achieve is 10%. So this trade can be a, what do you say, blockbuster. 10% in a month is what do you say, it is world class returns that you can't get anywhere. So I would love you all to take this trade. I like I told you, Friday's low is our stop loss. This is the candle. What is the low? 20,183 is the low of this candle. So what happens if we hit our stop losses? 20,180. So if we hit this stop loss, so that 8,000 that you're seeing is this will only happen if you carry forward this trade and not take your stop loss. But if you take your stop loss, you will hardly incur a loss of 1,435, which is pretty good for an upside of 33% ROI, or an upside of 7,000 or a 6,000, which is 1:3, 1:4 trade. And this is the trade I would love to give you all. I would like you all to take. This is not advice. This is not advice, but I'm trying to teach you all how to use option strategy. So you call this strategy bull call spread. You all can go on Google, search what is a bull call spread, and we did a 1:1 in the spread. For example, what do I mean by 1:1 is I buy one lot of call, and against that I sell one lot of OTM calls out of the money. So this, what does it do is, currently just to buy one lot of 20,200, we have to pay 322 rupees. Okay. And if we short 20,500, we will get, because we are a seller, we will get 155 rupees. So this brings our net debit, or what we pay, to hardly 160 rupees or 170 rupees, rather than paying 300. We have just paid 170 because we have paid 300 and we have collected 155 rupees, which will what do you say, which will also give us a hedge overnight. And as an option buyer, that theta decay that will happen as we go up. If the market goes sideways, this leg will start to give us profit. If this leg is giving us some loss, but our stop losses are very clear on the spot chart. Spot chart, I mean, is the Nifty chart. This is the low of Friday candle. So this is the trade for next week or next month, however you guys want to play it. That was all from my side. I wish everyone all the best. So just one last advice, that no shorts in the system until and unless there is a strong indication from global markets. Currently, we are doing very comfortable across the globes, across all the indices. Also, intermarket relationships are working really well, and all are in the favor of bulls. So short-term corrections, there might be some short-term corrections, but it will always be bought until and unless there is a major reversal. So no shorts in the system. Also, your equity trades or your stock specific approaches, be on the long side. Go long on some outperformers. Don't be short, because because it won't yield you that much. You might earn a few bucks, but if you want to earn a major chunk of money as a return of your portfolio, you have to be in longs, because the broader market is bullish. And bears, I don't think bears will make a lot of money. There might be some short term corrections that bears can play, but markets look so comfortable that I've given you guys the cutoff levels. So before that, I won't suggest anyone. If you think that the market is extended or something like that, just wait for a couple of days. You might see some sort of corrections, because remember, the market just don't go up in a straight line. They tend to go like this. So this bounces that you get, or this dips that you get, you have to buy that, and you have to be long on the market with a good stop loss. Don't be blindly long on the market. Have a stop loss in your system, because we as a traders, we as a investors, our sole what do you say, religion in this business is to protect our capitals and not over risk it. But that does not mean that we don't play aggressive when our view is clear. So take calculated risk. That's why I've named my startup as calculated risk, because that word makes a lot of sense when you think it of as traders, investors, or whether you think it of as a general or a very powerful word that you can use in your lifetime. So taking calculated risk is ever suggested, whether in life, whether in businesses, whether if it is a business in stock market. So taking calculated risk is very important, because you don't want to so for example, if I take a example of a dead man, if he's shot uh, in his head, uh, I don't think he'll be able to recover. By that, I want to say is that if you blow up your all the capital, I don't think you'll be able to stand once again. You or for example, you will have to be admitted in the hospital for like a couple of months, years. So that what happens is when you lose all your capital, you don't take calculated risk. So you get injured very badly in the markets, and you are not able to get in the right state of mind like in the next day. So if you blow up your capital now, you won't be like bulletproof standing tomorrow. I have more capital. There might be some guys with golden spoons in their mouth who has a lot of money to lose, but at some point of time, if you keep blowing that capital again and again, it will start hurting you. Because yeah, so take calculated risk, keep your capital protected. Even though our view is very clear, don't be short, because if you get trapped in shorts and market keeps going up, you will incur heavy losses. Just try to cut your losses fast and enter into new positions. Thank you.